My name is John Goodman. I'm an attorney in Boulder, Colorado, and I am here to talk to you about what the insurance industry refers to as tail coverage. Malpractice insurance, errors and omissions insurance that is issued for the professionals that I know of, and I'm specifically in this video talking about real estate professionals, specifically real estate brokers, is issued on what the insurance industry calls a claims-made basis. And what that means is that the insurance policy that is in existence at the time the malpractice claim is made against you is the malpractice insurance that covers you for that alleged negligence that is asserted against you. So, for example, if you were to have been involved in a transaction, a closing that occurred, let's say in 2014, and let's imagine that you were representing the buyer in that transaction, and in 2015 the buyer perceives that the property has an expansive soils problem and that the foundation is moving, and the buyer perceives that somehow you were negligent in allowing the buyer to purchase a property with an expansive soils problem, and the buyer sues you in 2015, the malpractice insurance that you have in existence in 2015, not the malpractice insurance that you have in 2014, will cover you. This raises an interesting problem for professionals, and that is at some point in time, you hope that you will be able to retire. Let's say you retire in 2030, 2030, you retire. In 2031, you won't maintain your malpractice insurance, but you could be sued in 2031 for a claim that arose out of a transaction that occurred in 2030, 2029, 2028. One of the reasons that malpractice insurance is issued on a claims-made basis is that while there are statute of limitations that do apply to help protect professionals from lawsuits long after the professional rendered their services, generally those statutes of limitations don't run until the buyer, in my example, discovered the problem. So the reason insurers issue malpractice insurance on a claims-made basis is to avoid being indefinitely liable on that malpractice coverage. So you retire in 2030, you get sued in 2031 from something that happened while you were an active professional, you don't have malpractice insurance. How do you protect yourself from this? You get all tail coverage. Does not come from covering your tail, but what the terminology comes from, and I mentioned this because you'll have to remember this 15 years from now when you retire, is that there is a certain likelihood the year after you retire that you will get sued. And let's say that likelihood is this much. The next year, the increment might be that much. The next year, it's less, and the next year it's less, and eventually it fades to nothing. And that's where the tail comes from. Picture a brontosaurus tail, the tail of liability that follows you after you retire. The year in which you're contemplating retiring, before you retire, you want to contact your insurance broker and explore with your insurance broker about the value and the cost and the options and the duration for purchasing tail insurance. Good luck with that. Thank you very much for listening. Hope you catch our other videos.